Well, as you know, woke culture continues to infiltrate most of our largest companies. Businesses are no longer judged solely on their bottom line, but on a range of climate and social measures. The once fanciful so-called triple bottom line of profits, people and planet has now been widely adopted. It's now more commonly referred to as ESG, the environmental, social and governance agenda. A recent survey by PricewaterhouseCoopers found 70% of our biggest companies have a sustainability strategy, while more than a third have a net zero target, and almost 1 in 4 have a reconciliation action plan. Now, companies are press-ganged by activist groups and business groups into complying, and those who don't are often named and shamed. And as we mentioned last night, anyone who goes against the grain is put back in their place. HSBC's head of asset management, Stuart Kirk, is facing the sack for calling out climate change hysteria in London.
The more people say the world is going to end, and here I've looked at the number of incidences in all press around the world that use climate catastrophe, the number of times the phrase climate catastrophe is mentioned around the world, the higher and higher and higher risk assets go, in tandem. The more we're doomed, the higher prices go. How is that possible? So what's going on then? The Sharons and the Mark Carneys of this world need to tell us why prices are going up with our own demise.
Let's bring in Kosha Garda, the CEO of Recastled, a media and technology advisory company. Good to see you, Kosha.
Good to be with you, Chris.
Now, Stuart Kirk had a great point, didn't he? We keep talking about catastrophe, but asset prices continue to grow. So the alarmists aren't putting their money where their mouth is.
Yes, and I think, what's very interesting about this, Chris, is this whole ESG industry has become a massive, it's big business. It didn't even exist about a decade ago. And right now it has something like $25 to $30 trillion in assets under management, projected to grow to 50 trillion. There's consultancies that have popped up around it. There's this whole index business. The S&P has an ESG index where they've come under fire recently because they've decertified people like Tesla, who arguably have done a lot for the environment under the automobile category. They're also, on the other hand, giving high scores to Gazprom and these other companies of Russian ownership of energy. So they're coming under a little bit of heat, but there's this whole industry that's come around that. And the problem is that these investors are putting trillions of dollars into it, and they have these companies spooked. So I think the reason why this guy got benched, even though what he said was not very controversial, is one of the biggest investors in HSBC threw shade on the comment and said they're not sure HSBC is the right fund for them to manage their assets. That has them spooked, and there's lots of money behind this.
Well, exactly. I mean, the dollar talks, and it's great to talk about freedom of speech, but the actual bank would have thought, hang on, we're going to lose funds. People don't like what you're saying. That means they're worried that we don't believe in sustainability and the ESG agenda, so that they won't place their funds with us, and so they're pushed around. But this is happening in a range of companies right across the world. But in Australia, those large superannuation funds, often controlled by unions, can push that sort of agenda onto major companies, can't they?
That's right. And I think, one thing that's interesting is we're going to see if there's a fight back. So one thing that's happened just in the last week in the U.S., and that might be a harbinger for what we see in Australia, is the Attorney General of Kentucky, Daniel Cameron. He came out and said that actually this ESG agenda is inconsistent with the law on the books, because the corporate laws that govern public companies say that your ultimate responsibility, fiduciary responsibility, is to the shareholder and not stakeholders, as you pointed out how they frame it, not citizens or causes at large, but shareholders. And so he basically has put out a warning, a shot across the bow, saying that this is in conflict with law and some cases might be brought. And I wonder if similar laws on the books here with Australia might lead to a similar action by the AG here.
Well, see, that's why I think it's fascinating. We would understand normally your company directors, their fiduciary duty, yes, is to maximise the returns for shareholders. But these large superannuation funds and other investors are, of course, shareholders, but they're not actually pushing for an agenda to maximise their share returns. They're pushing to deliver these social and environmental goals. So any boards who resist this are in all sorts of trouble.
That's right. They're really in this catch-22. It's a complete paradox where your responsibility as a board member is to maximize shareholder equity, but now they're kind of turning, that's the essence of capitalism, and they're turning it on its head where you're responsible for more of these amorphous things. And what's tricky about it is these ESG indices are based on amorphous subjective criteria. And so they can move with the wind. And it's just a few funds that control all that capital, which makes the whole thing, very dangerous.
But places like the Institute of Company Directors and even the Australian Stock Exchange, they all bow to these ESG goals as well. So directors are placed in a position where they have to try and service both ends, maximising shareholder value and satisfying those goals. In many ways, this agenda is having a bigger impact on some of our key policies, such as climate policies, a bigger impact than democracy.
That's right. And it is because, as you said, money talks. So the capital markets drive this, investors sort of push them into it, and then it puts the board members in this very difficult conundrum. So unless, I think, the Kentucky example, what the AG is saying, if we see more of that, if laws on the books that govern ASX-listed companies, for instance, and what they're responsible for, if somebody over here sort of prosecutes that, you might see change. Otherwise, this is just the way the winds are blowing, whether we like it or not. I
reckon there's going to be a reckoning coming at some time with this because the conflict is massive. And people, whether it be shareholders or the rest of the public, want to demand some clarity, but we shall see. Thanks for talking to us, Kasia.
Thanks, Chris.
Kasia Garda there from Recastled.